Retail sales were expected to jump 0.2% in September, but instead were unchanged. This is disappointing news as the US economy continues to slow. According to an article from The Hill, written by Ann DiNocenzio, consumer spending accounts for nearly 70% of the US economic activity, and Americans have remained mostly resilient even with inflation near 4-decade highs. Yet surging prices for everything from mortgages to rent have upped the anxiety level. Overall spending has slowed and shifted increasingly toward necessities like food, while spending on electronics, furniture, new clothes, and other non-necessities has faded. Now let's see what the Edgefinder has to say about some US dollar pairs. We're talking about the dollar, so it makes sense to look at the dollar price chart before hopping into the Edgefinder. So here on the daily chart, we're taking a look at the dollar over the past year as a whole, and I'll go ahead and zoom in on the last couple days. And it's really been nothing but bullish momentum for the dollar all year. Here in the months of October, we can see mostly green candles for the dollar, and there's really just not much else to be said. The dollar has been incredibly strong over the last year. As Nick has said a couple times, this has really been the year of the dollar. And it's really obvious just looking at the yearly, at the daily chart throughout the year. It's nothing but dollar strength. But let's just go ahead and jump into the Edgefinder. We're going to start off with Euro USD. So here, Euro USD, we're selling the euro, we're buying the dollar. This is a strong sell, score of -6. And I like to call the first currency number 1 and the second currency number 2. So when we're looking at these pairs, we are either buying or selling currency number 1 compared to currency number 2. So the euro compared to the dollar, we're selling because the dollar is much stronger. We want to sell the euro for the dollar. COT data score of -1. The institutional traders have been very long on the dollar for the past couple weeks, really the past year, but especially the past couple weeks, we've been seeing the same number, 77.71% long, institutional wise for the dollar, 22.29% short. And for the euro, we're seeing 56.15% long and 43.85% short. Retail sentiment is neutral. We actually have a score of 0, and that's because we're almost 50-50 here for the retail traders, 55% long, 45% short there. Seasonality has a score of -1. We're actually seeing strong bullish momentum, historically speaking, moving into the later months of the year, November and December. Upward trends here. Trend reading -2, and that's just because this market is moving downwards. And lastly, GDP growth, inflation, unemployment, and interest rates. We have scores of 1, -1, -1, and -1. And we have our numbers here to go along with that. Let's go ahead and move into our second pair, which is going to be USD JPY. So here on the USD JPY page, again, this is currency 1 compared to currency 2. So are we buying or selling the US dollar compared to the yen? Well, of course, we're buying the dollar compared to the yen because the dollar is just the strongest currency out there on the market as of right now, or at least so it seems. Score of +4 here. COT data sits at a +2 score here, and the institutional traders are heavily favoring the dollar compared to the yen. They are not liking the yen at the moment. 19.89% long, 80.11% short for the yen. Retail traders 26% long, 74% short, so that gets a +1 score here. Seasonality is a +1 as well. October to November, historically speaking, if we're talking all-time average, we see a slight upward trend. Last 5 years, not so much. We're seeing downward trend. Trend reading +2. This market is moving up respectively. And then lastly, we're seeing like a complete opposite of what we just saw with Euro USD. We have GDP growth, inflation, unemployment, interest rates with scores of -1, -1, -1, and +1. And again, we have our numbers here. For that, US dollar numbers are going to be the same, of course, but we have our yen numbers here as well. Now let's turn it over to stream highlights featuring TraderNick and Miko.
Take a look at the DXY with me here. You can see that yesterday's candle was just a messy one, right? A launch to the upside, came back down, and then sort of normalized back here today. So with all that said, where does that leave us? Well,
attention traders, this is not a drill. Here at A1 Trading, we are giving away $500. That's right, you heard it. $500 plus a gold VIP membership. Now with the gold VIP membership, you only got to pay one time, but here we're just going to give it to you, plus $500. How does that sound? For the whole month of October, by the way. So make sure to click the link in the description, enter the giveaway before the month is over. By the end of the month, one winner will receive a text message, so make sure that phone number you put in is correct. The winner will receive a text message from us indicating that they have won. So good luck, everybody.
Taking a look at the numbers, it continues to keep me bullish on the dollar. Okay. So CPI numbers still remaining red hot like that. To me, that just means looking for dips to buy the dollar, as we have been doing for so long on the channel. I don't know if you guys have been watching my streams for the last several months. We've been pretty much exclusively buying the dollar for like that. That's been our trade. We've been buying dollar yen, buying dollar Swiss, shorting euro dollar. Like that has been the trade that I've been in over and over in the last year or so. It's been working out phenomenal. So speaking of euro dollar, let's take a look at the euro dollar and see what's going on today. And I'm going to take a look at the Edgefinder, see if there's anything updated here on the euro USD. We remain at a sell bias, strong sell getting a -6. The commitment of traders data pointing towards big players still long on the dollar. Retail sentiment is pretty mixed. The euro dollar between retail traders seems to be pretty unfazed one way or the other. So, which kind of makes sense. You can kind of see the chart just kind of going back and forth here. But overall, just a quick look at the daily. You have the downtrend on the daily, right? Clear, strong downtrend on the daily chart. Looks like it is retesting here the 20-day moving average at this time. We'll see if we can reject there. In fact, I'll actually narrow down. So now we have our daily time frame bias to the downside. So where do we look for sells? Well, for me, I'd be looking at this area here, this previous high. You get a tap up into there. I would say that to me would be worth selling. As you can already see, we've already reacted there this morning. Price came up into that zone and immediately found some sellers. So you get a little extension back up to the upside there. That might be interesting in my opinion for sells, just favoring the dollar. Like I said, we continue to be dollar bullish until something changes. So let's see. I like that. So you might get some opportunities there. So I do like the idea of possibly even shorting euro dollar. I wouldn't even mind holding it into the weekend personally. I continue to look for these setups until something changes, man. And, we can talk about it until we're blue in the face about like what we need to see in order for the dollar to be bearish and all this, that, and the other. The problem is for me is that keeps me just never ending, like on the sidelines, right? I'm not going to only trade the reversal. I'm going to trade the trend, which the trend continues to be bullish for the dollar, in my opinion, and fundamentally and technically seems to be holding up. So I look at the 4-hour chart. This actually gives you a pretty good retest sell around the 50% retracement. You've got this, so you got your 50% retracement using our fibs from swing low to swing high. Currently testing around the 38.2. We had a little bit of resistance there, trying to poke up into that 50% retracement. But overall, I think you get some sell pressure in this area where we could see some continuation of the overall trend. So I do like euro dollar short. Maybe there's intraday stuff you could get into if you're more interested in that. But for me, I like the 50% retracement for possible sells on euro dollar.
Yeah, euro USD. I'm not the big. I mean, I was coming into the week. I was a big fan of this one coming into the week. This was really my area of interest. Beautiful resistance here, beautiful support there. So I was looking for the market to come back into that 0.985 level. However, we just haven't seen that. To be fair, most of the price action this week has just been consolidation. I do like the big move we had to the upside, though. I feel like that could be trapping in some buyers here at the top here, trapping some buyers with that big 4H candle just to see potentially a lower high develop and the market come back down. It would have been a little bit better if it did it at my area of interest. That would have been a nice little trade there, but it looks like it's struggling to get there. And we have some major wick rejections down the 4H. So again, the bias is still the same because I'm still bullish on the dollar. Everything on the higher time frames here, monthly, weekly, daily, all still pointing to the downside. So I'll still be favoring the market to continue. And again, targets for this one back down to the lows. And again, different from pound USD because pound USD creates some new all-time lows, whereas euro USD We're still floating at prices. If you go back 20 years, we have traded here before. So yeah, Euro USD 0.95, 500 is looking good. I would have preferred to retest that resistance there. I would say if you're looking to trade this, a clean break of this would be a lot better, because right now we're kind of coming back into the consolidation. So, the technical edge is kind of disappearing a little bit when we come into the areas of fluctuation like such. But if you can get a break of that, a strong break of 0.968, that'll make a lot more sense. And continuations back down to the lows, and simply just continue what the market's been doing for the past year or so, which is falling to the downside. So yeah, Euro USD, I would say price action here, not the best, but I will be expecting the market to continue to the downside, back down to those lows around 0.95, 500. And so yeah, how it reacts with that level. And USD JPY still pushing. So yeah, with this one, there's not much to do. If you're on the lower time frames, it's good. You can trade with this, but for me, from a full H standpoint, it's been difficult to find good swing entries for this one, especially of recent times. You can see we did have that big collapse, and then prices kind of just consolidated and still chugging to the upside. So it's difficult to find some good buys on the 4H hourly. You probably can get away with some definitely like 30 minute and 15 minute, but overall it's been a little bit hectic. So yeah, USD JPY, I was talking about this monthly wick on the left here, which I think we've just taken out. Yes, we have. So yeah, this one is still flying. It's difficult to say where we could get to. I mean, this could be an area of interest potentially. We could break through that. We might not get there because there's just not a lot of data in these areas we can work with. We have to drop to the monthly, even the quarterly time frame. So yeah, difficult to say where we're going to reverse from or get to. And as for trading this, again, you want to be dropping to the lower time frame, just using that structure there. Again, we had that resistance there. The market's broken through. A retest of that would be nice. 30 minute, 50 minute. And yeah, probably want to just trail your stops or use the psychological levels as targets. We've got 149 there. That'll be a big target. 150 will be a big target. So that'll be interesting to see what happens at that level. But yeah, you just got to be playing the psychological levels because there's no real, structural point we can aim for on these time frames, so to speak. Monthly, maybe, but on these time frames, just look at the psychological levels as targets. Best thing to do, really, in my opinion. But yeah, just a retest of structure. Prior structure is your best way to trade USD/JPY because the momentum is already there. All you need to find is a good area of interest and trade it in that direction. And shorts is definitely a no-no. Shorts is definitely a no-no.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edgefinder, you can find that in the description as well. Thanks for watching.